Welcome to Understanding Fixed Assets at the University of Virginia. To give you a sense of the scope of fixed assets at UVA, the university is responsible for $4.5 billion of fixed assets, which is made up of 30,000 assets within 10 different asset categories. Buildings represent the single largest category with over 500 buildings across campus, valued at $2.7 billion. What is considered a fixed asset? A fixed asset is also referred to as a capital asset. A fixed asset is tangible property owned by the university with a useful life greater than 1 year and having an established minimum threshold. Land is the one exception where there is no minimum cost nor useful life requirement. All land acquisitions are treated as fixed assets. Fixed assets also include intangible assets such as major software. Fixed assets are capitalized in the university's fixed assets financial system for accounting, accountability, and financial reporting purposes. There are 10 different categories of fixed assets, but most people think primarily about equipment because they order equipment, work with equipment, are responsible for its maintenance and inventory, or in some way come in daily contact with equipment. Capital equipment is tangible property with cost equal to or greater than $5,000 with a useful life greater than 1 year. The one exception is ETF equipment, which is allowed a lower threshold of equal to or greater than $500. Equipment also includes what is called a fabrication, which is in-house custom-built equipment that is not available for retail purchase and is required principally for research. Again, the minimum cost must be $5,000. Other types of fixed assets include various kinds of motorized vehicles such as buses, cars, motorcycles, trucks, and maintenance vehicles. Major software, including externally purchased software, software upgrades, and internally developed software with a minimum cost of $250,000. Software purchases between $5,000 and $250,000 are part of the equipment category of fixed assets. Library books and other resource materials are capitalized as a total aggregate each year. New permanent roof structures with minimum cost of $250,000. Building improvements with a minimum cost of $250,000 that upgrade or extend the useful life of a building, such as the rotunda renovation. Parcels of real property are capitalized regardless of value, but are non-depreciable assets. Improvements made to real or tangible property leased to UVA by a third party, costing a minimum of $250,000, such as the Birdwood Golf Course practice facility and the squash courts located on Boar's Head property. Improvements other than buildings with a minimum cost of $250,000, such as Davenport Baseball Field or Scott Stadium. And infrastructure, or longer life capital assets with a minimum cost of $250,000, such as a pedestrian bridge, street lighting, and sidewalks. Fine and decorative art are not considered fixed assets. It is necessary for everyone to understand the importance of fixed assets at the university. Generally accepted accounting principles, Government Accounting Standards Board, and the Commonwealth of Virginia require an accurate and up-to-date inventory of assets for accounting, internal controls, as well as financial reporting requirements. This is to prevent UVA from financial losses resulting from lost, stolen, or improperly traded in assets. It also enables UVA to comply with various audits, such as those conducted annually by the Commonwealth of Virginia or the federal government. Serious repercussions could result. One repercussion could be the reduction of the F&A rate. The university negotiates the F&A rate, which is the allowable overhead percentages it can charge on federally funded research awards. If a federal audit of UVA's sponsored research equipment finds assets which are misplaced or worse, missing, the consequences can be quite serious, as the federal government can view UVA's property management system as inadequate and then reduce the F&A rate. A single F&A percentage point equals approximately $1 million of revenue. So a loss in one or more percentages would cause UVA to lose millions of dollars of important revenue. Another repercussion could be the loss of sponsored research funding. The federal government utilizes the Office of Naval Research as one of its administrative arms to annually audit the university's property management system to ensure federal research dollars flowing into UVA for equipment assets meets its high standards. Failure to be in compliance can result in placing millions of dollars of UVA research awards on hold or losing both existing as well as future sponsor awards if sponsor-funded assets or sponsor-owned equipment is not properly accounted for and reported. ETF lawsuits could pose another repercussion. UVA's ETF equipment acquisitions each year represent the collateral to the state bond, so any missing, stolen, or misplaced ETF assets subject the Commonwealth to financial exposure if the bond loses that collateral. Departmental funding will have to be used to replace the lost, stolen, or missing equipment. Accountability of ETF equipment is a serious mandate from the Commonwealth of Virginia. Each department must maintain accountability of its assets so it can operate as necessary to fulfill its various missions. In addition to the prior reasons, which explained why it's important to safeguard an institution's investments in fixed assets, one lesser-known reason is not wanting to find your institution on the front page of the news, highlighting its lack of adequate asset management. For example, one institution found itself trying to explain how it accidentally gave away a $1 million art object at an auction for only a few dollars. Another institution found itself on the front cover of a national newspaper headline for improperly throwing away assets into a dumpster, demonstrating a lack of internal controls, which kicked off an expensive and time-consuming statewide audit of all its institutions. Neither of these institutions realized how such events can quickly translate into more than just financial losses. Negative news coverage can easily damage an institution's otherwise stellar reputation and question its financial stewardship, along with potentially causing serious effects upon two prime areas, its federal F&A rate and its sponsored research program. Many people are involved with equipment assets to one degree or another. If you are in procurement, you play an important role in approving purchase orders for capital equipment and serve as another pair of eyes for possible miscoded requisitions, especially when equipment might be procured on UVA's travel and expense card. You might be someone who works with equipment assets, so keeping it in good operation and safeguarding it begins with you. You might be an equipment coordinator, so you are responsible for tracking all your department's equipment assets and serving as the sole inventory liaison to the fixed asset group. If you're a PI, you have a primary responsibility to ensure assets funded by your sponsors are maintained and protected. ETF equipment coordinators play a major role in budgeting for and approving specific ETF equipment, as well as being responsible for your school's ETF assets while the state bond period is still in effect. Perhaps you're the person who manages UVA's surplus property system, so you represent an important safety net for helping to ensure equipment assets don't get out the door without fixed assets accounting approval. As a chair or school dean, you have the highest level of responsibility for those assets belonging to your department to ensure each person under your domain understands their role and involvement when it comes to equipment fixed assets. Finally, if you're in fixed assets accounting, you play a critical role capitalizing and tagging new equipment assets, conducting the annual inventory process, financial reporting to those assets, and effectively maintaining UVA's financial assets inventory and its policies. It is imperative that the correct expenditure type is used when making purchases in the marketplace. When making a purchase, you are required to choose an expenditure type. When purchasing equipment assets, choose an expenditure type that starts with equipment capital. Remember, equipment assets are tangible property used in normal day-to-day operations, have an individual cost equal to or greater than $5,000, must be owned by the university, and have a useful life greater than 1 year. It is important to know and understand the annual equipment assets inventory cycle, as your assistance is critical in helping a department's equipment coordinator and the fixed assets accounting group ensure that all equipment assets are accounted for during the inventory process. The inventory process begins with a manual self-audit conducted by the departments for those buildings having less than 30 assets and in certain designated areas. It is followed by the fixed assets accounting group, who conducts an independent barcode scanning audit during the October to March timeframe. Upon completion, not found inventory reports are sent out to departments for review and updates to be finalized in May. The last step in the process is the final equipment inventory certification, which is sent to each department in June, reflecting its missing assets. This requires the chair's signature acknowledgement and submission by the requested date to enable the Fixed Asset Accounting Group to finalize the total university missing assets by the fiscal year end. All equipment and vehicle assets are assigned an asset number when initially capitalized for accountability. All vehicles and most equipment will also be affixed with a barcode tag with that asset number for inventory tracking in the university's fixed asset accounting system. The equipment barcode will have either an E in front of it if it is an ETF asset, which are funded by special state funds, or a 5 or 6 digit number, depending on the year purchased, for all other equipment assets. Vehicle barcodes have a 5-digit alphanumeric number. All asset tags are placed in full view so they can be easily scanned when conducting annual inventories. You may see other barcodes on equipment which look slightly different, as some departments use these for calibration requirements or other tracking purposes. It is important you take responsibility for your equipment assets. Assets must be accountable and maintained in good working condition. Be sure to notify your equipment coordinator if assets are moved to a different location. If you are surplusing assets, there are important steps including filling out the surplus form, ensuring the asset number is entered. If you need to transfer an asset to another department, a P3 form will need to be filled out. If equipment is being transferred to UVA from another institution, approvals are required from the Fixed Asset Accounting Group. If the equipment asset is following a professor to another university, proper approval is required from the Fixed Asset Accounting Group. If you are trading in an older asset, the fiscal technician needs to make sure that information is included on the purchase order. If you need to return an equipment asset to a vendor, or if you find that an asset is missing or stolen, it needs to be reported to the proper authorities and the Fixed Asset Accounting Group. It is important that everyone at the university understands the importance of fixed assets. The knowledge helps ensure the university's financial investment in these assets is protected and that it meets all state and federal standards and accounting requirements, while guarding against avoiding the loss of sponsored research funding and the loss of revenue resulting from federally reduced F&A rates. If you have any questions or concerns regarding fixed assets at UVA, you can go to the Fixed Assets website.